Hello, welcome to another video tutorial with Kukura Capital. In this video tutorial, we're going to be discussing one of the most commonly used indicators, and that is the moving average. Now, the moving average is a great indicator to identify the trend of the market. Now, in order to be able to place a correct trade, you need to be able to identify what condition your market is in, whether it's in an uptrend, downtrend, or in a ranging trend, also known as sideways trend. So one of the best ways to be able to identify the market condition is using a common and well-known indicator called moving average. Now, there are four types of moving averages, but the main ones that we focus on is the simple and exponential moving average. Now, a moving average is a lagging indicator, as it tells us data and information based on what's already happened, and it doesn't necessarily predict what is going to happen. However, with that said, you can use a moving average to identify when you're going to get a change in your trend. Now, in order to place a moving average, you simply go to Insert, Indicators, and then you go to Trend, and you click on Moving Average. Now, as I discussed, your moving average, there are four types, and the main ones that we focus on is simple and exponential. Now, moving average is based on the averages of either your closed, open prices, and is over a certain period, which you can determine and edit based on your period. You can do 10, 50, 20, 200, and you can apply this to your closed, open, high, or low. Mostly you apply it to your closed. Now, the most common periods that are used in moving average is 15, 20, 50, 200, and 100. Now, each period has a different sensitivity to the change in your prices. Now, obviously, the smaller the period that you use to calculate the moving average, the more sensitive it's going to be, and the larger it is, the less sensitive it's going to be to changes in the trend. And I'm going to show you the difference in this, and I'm also going to show you the difference between your simple and exponential. Now, the main difference is that your exponential is calculated much quicker and obviously changes at a quicker pace in comparison to your simple moving average, but the application is pretty much the same. Now, I'm just going to show you the difference and the effect of the time period that you choose for a particular average. Now, in this case, we're going to just say 15, which is a common one, simple, and we're going to choose the color. We're going to choose blue, and we're going to make it quite bold so you can be able to see it. And you can see this is your 15 moving average. It's pretty tight to your chart. And then if you have a larger time period, you're going to see there's quite a difference. So I just go to Insert, Indicators, Trend, Moving Average, and then I'm just going to choose a larger period. I'm just going to say 50 in this case, simple. I'm going to change the color, make it purple, and you can see there's quite a difference between the two. And then I'm going to insert a much larger one. Perhaps the most commonly used is the 200 simple moving average. I'm just going to put that on 200, and I'm going to choose a different color. I'm going to make this one orange, and you can see that the results are quite different, and the movement is quite different based on the period that you choose. Now, ideally, the one that is mostly used is this larger one, the 200, because you want to identify the trend of your market. Now, in order to identify the trend, you're going to be seeing whether your moving average is below or above the chart. Now, I'm just going to delete these ones so you can have a clearer idea of how it works. So I just right click, delete. So in this case, you can see we have one, and it's really clear to see whether the moving average is above or below. Now, in the case that it is, as you can see here, strongly distinctly below your chart, it means you're having an uptrend. As you can see here, our chart is moving upwards. I'm just going to draw a line here, and it correlates with our moving average being below the chart. Now, in the case that your moving average is just wiggling between and on top of your chart, it's normally an indication of a ranging sideways trend, which is not really trending. And when you have your moving average above your chart, it is a clear downtrend, as you can see, and this is very useful when you're trading, and we'll be explaining why. Now, another way other than this, you can use your moving average to identify the change of a trend. So we're just going to use a different chart. Now, in this chart, we're working on the Great British Pound Sterling and the US dollar in a 1 hour time frame, and here we're going to use the Euro USD. Now, the great thing about moving average, it works perfectly for any time frame. So we're just going to use, in this case, a 4 hour time frame, and we're going to apply moving averages, but this time we're going to be trying to identify when we see a change in the trend. Now, here we use the moving average to identify whether our trend is going up or down by simply identifying if our moving average is below or above the chart. Now, in this case, we want to identify whether our moving average is whether our chart trend is going to change using our moving average. So what we're going to do is we're going to apply two moving averages of a different time period and identify where they cross. Normally where our moving averages cross, it's an indication of a change in the trend. So we just go to insert, indicators, trend, moving average, indicators, trend, moving average, and you get this window. It's really important that you understand this is how you change and determine the time period that you want to calculate your average. Simple or exponential, and close normally is the standard, and your colors and how thick you want your line to be for visibility. Now we can use a simple and exponential. The principle is exactly the same. In this case, I'm just going to use an exponential, but I'll actually open a separate chart just to show you the difference between exponential and a simple moving average. So I'm going to choose a 50 and I'm going to put a 100 as well. And the best thing is always to change colors so you can really see where they cross over. So what we can see here is that we had a strong downtrend, and here where they crossed we started to see an uptrend. Where they crossed again we start to see a downtrend. So that's a really great way to understand and identify where you're getting a change in your trend. So if you can see my arrows, we have a indication here, and it crosses over, we see a strong downtrend. Then where it crosses over again here, we see a indication of a strong uptrend. Let me just put an arrow there so it's more visible. You start to see, well actually technically it's here, this is another indication for a downtrend. So I'm just going to move this arrow to here, and we start to see now, so from downtrend to uptrend. And you can use this tool crosshair, which shows you the first number is the amount of candles that have taken place to have already formed, which is 253, and then the second number is the number of points or pips depending on your platform. And this platform it's purely pips. In other platforms it's points, so then you just have to divide it by 10, but here it's pips. This is a different platform. It's still a metaphor trading platform, but the broker is with MT Trading, and JP Markets they show you the points, so you have to divide it by 10 to get the pip value. So here we have 570 pips in movement, and then the final number is the price at which this currency pair is going at. So what you can see here is that if you had entered a trade like this, you would have made about 566 pips of profit, and based on what position size you did, that's a lot of money that you made. So this is a great way to identify whether or not your trend has changed. Now what I'm also going to show you is just the difference between the simple and the exponential, just in how they work. So I'm just going to do, I should actually open a clean chart. I'm going to do Euro USD because it's the most traded currency pair, and then I like this template because it's clear, the black on white. It's much easier to see the differences. And then I'm just going to open a candlestick chart, and then I'm just going to go to indicators, trend, then I go to your moving average, and then I'm going to choose exponential 100, make it olive since that was the default, and then I'm going to insert another one which is a simple, the same time period, and it's going to be blue just so you can see the difference. And you can see there's quite a difference in the movement. The exponential is definitely more sensitive to detecting the changes in the trend. Thank you for watching a video tutorial with Kukura Capital. If you want to know what our video tutorial is going to be next week Tuesday, make sure to subscribe to our weekly newsletter, and do note that we do have new video tutorials every Tuesday going through all the different indicators that are on your metaphor trading platform, and we are always here to help you be a successful trader. Do feel free to contact us at kukuracapital.co.za. Thank you for watching. Do make sure that you subscribe so that you are the first one to know when we've released a new video tutorial. And remember, the aim of our tutorials is to go through every single indicator that is available on your standard metaphor trading platform. So we will be going through all of these different fantastic indicators so you can have a large variety of choices to choose from when you're trading. Thanks for watching.